If you're an investor right now in 2025, I think we're about to go through the biggest change in history, and that will equate to the biggest opportunity in history to be an investor. It's less important to be right than to be right about what other people think are going to be right. You need to discover one thing a little bit early and act on it one time in your entire life. If you could do that twice in your life or three times in your life, and if you do it properly, you could be amongst the very best investors in the world over a multi-decade period just by doing that and absolutely nothing else. From an investor perspective, I think there are three obvious companies in the space, and unfortunately two of them are private, but it's Tesla, it's Figure AI, and Apptronic, because they're all partnered, or in Tesla's case, they have their own internal mega tech AI platform. For me, I'm invested in all three. I would say I'm like ridiculously aggressively invested in all three. And it's because I feel that all three are going to be successful in the space. I think it's really important to understand how to bucket your money and how to find risk capital in your life and have it not be the capital that you're using to go on family vacations and send your kids to college. You have to figure out how to have a separate bucket of capital called risk capital that is capital that you're not afraid to lose. That if you were a billionaire, you would be investing the same way that a billionaire invests, because that's how you really make the money, right? Like that's how I've done, I don't know, roughly 70-ish% annualized returns total portfolio going on 17 years.
Hey everyone, before we dive into today's interview, I just want to take a quick moment and let you know about the featured sponsor, Interactive Brokers. Interactive Brokers is the largest US online trading platform, and it's what I personally use to manage both my Roth IRA as well as margin trading account. We're super excited to be partnering with them to help make the show bigger and better than ever. I love their customizable interface, easy to use ordering system, and it makes it super fast to manage existing positions and, of course, open new trades. To learn more, go ahead and click the link down below in the description or popping up right now. It's a fantastic way to help support the channel as well as the podcast and help us bring on future great guests. Thanks so much in advance. And with that said, sit back, relax, get your notebooks ready, and enjoy. All right, everybody, welcome back to the TraderLion podcast, brought to you by DeepView and the Ultimate Trading Guide. I'm your host, Richard Moglen. Joining us today is a market wizard who does not look at charts or analyze fundamentals, yet he has produced an outstanding track record of over 68% average annual compounded return, and from a stake of 83K traded his way to well over $2 million. Chris Camillo is an individual investor and founder of Dumb Money Live. Very entertaining. And today we're going to dive into his process of informational arbitrage, discussing all things Tesla, AI, robots as a service, and much, much more. Chris, really, it's a pleasure to have you on here. Like we were just chatting about, it's great to hear about different perspectives, different disciplines, different way of approaching the markets. So I've been really looking forward to this. Welcome.
Yeah, thanks. I think, by the way, I think that stat you just highlighted, which is technically true, that's from my 2007 to 2010. I think I'm about 17 years into that now, and it's more like 60 or 70 million from that initial 83K. I sound like such a jerk even saying that, but I think I just want to make sure that your audience is aware that the track record's about going on 17 years ish now. But that was my first 3 years, which was in many ways, the most exciting. That kind of first journey from tens of thousands to a couple of million. Uh, but yeah, so nice to be on the show, and nice to connect with some technical traders, which I've warmed up to over the years, by the way. I used to be so anti-technical trader, and it's like I look back like 15 years ago, I had so much, I don't know, negativity around technical trading, and now I've spent enough time with you guys that I have more respect, for what it is that you guys do.
Yeah, it's always fun talking with different people who use different strategies, because there's core principles that are all the same for successful strategies. And like I was saying before we started recording, a lot of the names that I think you're focused on, we're focused on just in our different way from a different perspective. So it's great to chat with you. And to start with, it was funny to reading your Market Wizards chapter and seeing how your trading kind of started in a 7-Eleven. Do you mind telling the story about kind of your first trade of Snapple and how that kind of kicked everything off?
Yeah, that was my first social arb trade. Well, I didn't have a name for what I did at the time. There was no such thing as social arb or information arb, but I did some trades before that, but that was like the first trade of my current methodology that I'd use today, that was really impactful. I was a garage sailor as a kid. So like when I was 13, 14, I would essentially go around, and this is pre-internet, obviously, right? It's like 80s, in the 80s. I would go around and basically read the newspaper every Wednesday and Thursday and look at all the garage and estate sales and try to assess what estate sales were most likely to have mispriced items.
Hmm.
Back then, and still today, I think for the most part, a lot of these estate sales are managed by kind of middle-aged women who have a really good sense for certain things like silver and antiques and whatnot. But they really used to misprice a lot of male-oriented items back in the day because remember, there was no eBay, there was no internet. You can have like these books that would technically tell you what things are worth, but it was a real pain in the butt. And they weren't like totally comprehensive. So there were a lot of items I used to buy and sell, like old fans and trains and watches, and obviously any type of sports cards and just anything that was male oriented, they tended to like not want to deal with
Right.
or really properly assess the value of. Anyway, long story short, I would start every day with a Snapple from the local 7-Eleven. I would wake up at like 5 in the morning, 4 or 5 in the morning, and you'd have to be first at the sale because only if you were first did you get to identify and try to be first to that item that was listed in the paper that you thought might be mispriced.
Right.
Um, so I started with the lemon flavored Snapple iced tea, and one Friday or Saturday morning, I noticed instead of having two full refrigerators of Snapple, and by the way, Snapple is like one of the hottest companies in the world at the time, it had been for years. They were only down to like one half of one refrigerator door of Snapple. And I was like, that's a huge change. And I spoke to the clerk, and he was like, yeah, from now on, that's all we're going to have because there are kind of some new competitors. I think it was like Arizona Iced Tea, maybe some other competitors came in. And so I went home and spoke to my older brother. I was just like I don't know if I was like 13, 14. I was like an early teenager at the time. I was in that period of my life when I was exploring investing, but hadn't really figured out how I wanted to invest. I was reading a lot of books, technical trading, all kinds of different trading books back then. I was a super investing nerd back before that really was a thing. There were no kids that invested back then. Uh, but I went to my older brother who was a stockbroker and I said, hey, here's what happened. Like, is this potentially bad for Snapple? And if it is, can I make money off it? Can you help me? And he taught me how to buy my first option. Like I bought a put option through his account, right? I gave him $300, which was like all the money that I'd saved up at the time from garage selling and trading garage sale merchandise. Back then, $300 is a lot. And he bought a put option in Snapple because the earnings were just like a few weeks away.
Right.
And sure enough, it was the first quarter in the company's history that they had fallen short of earnings expectations.
Hmm.
And it was because there was inventory building up in the channel. So what I identified at that 7-Eleven was just one example of what was happening all around the country. And it blew me, and I made three times my money on that option. So I made like $900, which was like
And you were
insane.
hooked.
I'll never forget it. I'll
Yep.
never forget it, right?
Yep.
Mm. And to this day, it still it really resonated with me that I was just a young kid that I identified something and I was able to connect dots to a trade that was certainly visible to any other person and especially visible to professional investors on Wall Street and institutional traders. Like, why was that even possible? And it's like really stuck in my head. And I went on at the time to continue to trial different types of trading methodologies. I didn't know at the time what I was doing. Like there was no like, this is not like, this is my strategy. I'm going to
Right.
replicate this now. But it was later on in life when I went back to investing that I realized that, hey, that's a, that's a methodology that I think I could do really well with if I just focus on identifying change in the world, whether it's a change in a trend or a consumer behavior or a cultural shift or a political shift or change in the weather. I mean, listen, anything that's changing in our universe um, can lead to an opportunity, right? So it's all about connecting the dots of that change to a company or a sector that would be meaningfully impacted by that change, either
Right.
positively or negatively, and connecting the dots quicker than others. And of course, there's more to the methodology. You have to assess, is the change meaningful to the company or sector? Are there other things that are happening within that company or sector in that time frame that are more important than the thing that you discovered, right? That will impact that company or sector even more meaningfully. And if so, that's a big risk. And then, of course, one of the most important parts of the methodology that I speak about today is, to what degree has the rest of the world, and when I say rest of the world, what I really mean is the market, have they already identified what you identified, and is it already factored in
Right.
to the current price of that stock or stocks in that sector? And that's probably one of the most difficult parts of the methodology because it's not like an exact science. There's a lot of things I do to kind of assess what I call information dissemination, or the extent to which that information was disseminated widely to the investing public and to institutional Wall Street. But when everything aligns, you ultimately have this really precious opportunity for a social arb trade. And, I used to say I would come up with, I would start with thousands of opportunities a year. And, back in the day, I would usually come up with maybe two a year that I would consider really good high conviction social arb trades. So like, it's this tremendous amount of work for a couple trades a year. But now that the world has become so digitally connected and we communicate all of our feelings and everything that we're doing and buying and wanting and loving and hating in the comment section of social media channels like TikTok, it, that sort of methodology is a lot more approachable, and you're able to actually detect a lot more change now with these digital tools that any of us regular investors have access to, as opposed to when I was doing it back in the day. So I end up trading a lot more now. Like there's half a dozen or more. Sometimes it could be 8 or 10
Hmm.
of these big high conviction trades that fall out of the bottom of that funnel a year. So I always tell people there's never been a better time for this type of methodology because all the information that you're trying to access is like literally free and it's out there, but it just takes a tremendous amount of time for an investor to like. I talk about this. I spend, 3 plus, sometimes 4 hours a night reading TikTok comments. It's funny that we're having this interview right when TikTok maybe is about to get canceled.
Yeah,
It's a little bit
it's too
scary
bad.
for me.
Yeah,
But
and I was actually gonna make the joke when if I passed you, on the street or something, the first thing I would think about is that guy's on TikTok all the time. I can just tell. But yeah, like, can you walk us through maybe a potential scenario about how you might investigate using TikTok or other social arbitrage measures and tools when you have an idea or are looking to find an idea? How would you kind of make use of that platform?
yeah, so what you're looking for, so a lot of what I do is keyword searches
Yep.
on TikTok. And I'll just use a random one that I honestly used to use a lot more many years ago. It's not as effective today, but I always used to say these golden words that I used to, and I would never speak these words to anyone. So I was like, these three words are like my proprietary words that like
Yep.
get me all my alpha. It's not so much anymore. But the words are, and I never said them, I don't think publicly before, but the words are sold out everywhere.
Hmm.
So, and that was primarily when I was focusing on Twitter. So, prior to TikTok, there was a time, believe it or not, well, we call it X now, but there was a time when people expressed their feelings outside of politics and news and finance on Twitter. Like Twitter was the place. They would talk
Yep.
about like what, thing they wanted to buy or like what they were doing that day. It was really cool. And by searching for the word sold out everywhere, and I would do that like every day. every day. There was never a day where I didn't search those words. The second people started talking about, these shoes are sold out everywhere, right? Or whatever it is. Like, remember when the white Vans were sold out from because a viral video happened like 10 years ago? So it's like you would find out same day. Like literally
Hmm.
within hours of it happening, you would find out that what that trend was. So I actually have many, many, many dozens of keyword phrases like that I regularly search for, except these days I'm more often searching for them on TikTok as opposed to Twitter. But a lot of what I do on TikTok, quite honestly, is I just go through like raw video, like thousands of just raw videos, just anything that's trending, anything that's moving. And the videos themselves are not that important because it's just one person's opinion. The comments are where all the gold is. So
Gotcha.
if someone's like, hey, this is going to be the new big thing this quarter, like let's just say it's fashion, because this is the thing that people can identify with. So they're like, hey, this is the new trend. Everyone thinks all I do is like identify trends. Trends is actually a pretty small part of what I do, but if someone's like, this is the new trend, well, if you go in the comments and people are like, I don't get it or whatever, like you got to take it with a grain of salt because it's just like one content creator. Who
Right.
knows? Maybe they're getting paid by the company to say that, right? But if you go in the comments and there are like 1,000 people organically like, oh hell yeah, like that is the coolest looking whatever I've ever seen. Like
Right.
I'm trying to buy one right now, or I saw so and so wearing that, and I immediately went to buy it, and it sold out in my neighborhood. Like that's where the gold is, right? You can really get in the heads of consumers and what they're feeling, what they're thinking, what they're experiencing. And that data is the most precious data on earth because it provides you with the ability to actually front run transactional data. And in my
Credit
world,
cards and stuff.
yeah,
Yeah.
transactional data is kind of like the gold of Wall Street or institutional data. So all the hedge funds, all the buy side houses rely heavily on various forms of transactional data, and they all kind of have their own proprietary ways to synthesize that data, how to trade it, how to develop trading models around it. There are some, research houses that do that work on behalf of smaller hedge funds that don't have the big teams to do it themselves, but ultimately they all have the same source data. The problem with that data is it does need to be cleansed. It does need to be synthesized, and then ultimately needs to be traded through what a lot of times is a kind of a large organization that moves very slow. So there's a window of time that you have between when something changes in the world and when that change starts to show up in the transactional data. And what's really interesting is sometimes, even if it's like a really hot product or movement, uh, whatever it is not properly in stock or inventory to take advantage of it right away.
Right.
So you won't even see at like a very high level, if you're analyzing the data for like, let's just say Hoka running shoe, like anything, right? Any random company, the Wall Street analysts that are looking at the data coming in off of transaction, and by the way, this data costs hundreds and hundreds of thousands of dollars per data set. That's what they pay. You won't see the data move because the only piece of the data that's actually moving is related to a product category that they don't have enough inventory to like move the needle yet.
Hmm.
But they will over the course of the next few weeks or months, right? Once the company realizes how hot that SKU is, they'll start to manufacture more of it. Um, and so like there's like a lot of nuances that happen like that I always say, Wall Street has a huge disadvantage to us because like we don't have to play by those rules. We can get more creative than Wall Street and
Right.
we could identify things quicker than they can. And this is one of the ways that I do it. So again, getting back to the comment data, it's highly interpretable, which is a problem for Wall Street because Wall Street isn't that creative. Wall Street tends to either be math heads, like guys that are coming out of data science, who are definitely not creative, or they're kind of your more typical fundamental analyst. But the concept of interpreting a data set that's speech and evolves over time, so there's not like a very long history of repeatable correlation between this specific type of data and this stock movement. That's what they want. They're very lazy. They're like, well, show me the 3 years of correlation. Like 3 years of correlation, this word didn't exist 3 years ago. The way people express themselves has changed over the last few years. So, like, I can't do that for you. And it's funny, the reason why I'm telling you this, you might or might not know, I had the first social intelligence company called Ticker
Ticker
Tags for
tags. Yep.
Wall Street. And so I spent years of my life. I had to deal with Twitter. I was one of three financial companies that had to deal with Twitter. I actually ingested the fire hose or the Deca hose, which is 10% of the fire hose, in real time and had 7 years of history. We basically had over 1.5 million word groupings that we would quantitatively measure the volume of speech patterns on a minute by minute basis. And we could detect anomalies, and we would try to sell that data to hedge funds. But they were like, well, show me years worth of correlation data. And you're like, dude, no, I can't do that. Like, why would you even ask for that? That should be so obvious to you that
Hmm.
that's not even a thing that's doable. But that's all they know. They only know that. And Wall Street is a very cover your butt type of atmosphere, to where if you don't have a long history of proven success with a particular model that's repetitive, and like they don't trust anything. So what you're if you go to them and you're like, hey, I just read a ton of comments on TikTok, right? Like my interpretation is that this one thing is going to heat up based on the way people are speaking about it. But you can't prove it to them through like very strict data, correlation. They're never going to trade it at scale. And so
Right.
that's the issue I had at Ticker Tag selling to Wall Street. But that issue is an opportunity for investors that aren't so scared, right? That don't have a cover your butt mentality. Like it's so intuitively obvious that this just makes sense. And for me, especially, that I'm happy to like throw a lot of weight and risk capital when I see behind a trade that's based just on this conversational data set, because it's the data set I've been trading since since the birth of the first social channel. Like I was doing this on Facebook. Oh, let me tell you a funny story on Facebook. So if
Hmm.
you go all the way back to like one of the early, I don't talk about this one very often. There was a show called Chuggington. It's like super old now. I don't know if it's like 15, 16 years old. It was like a children's animated show that came out of England. And there was a single comment on my Facebook page back in the day when Facebook was the only social channel. And it was a mom who was like, hey, my kids, I think she had twins. She was like, my twins, for the first time in their life, were quiet for like 15 minutes straight. And I thought something really bad happened. I went rushing through my house, and there was this show Chuggington on, and they're obsessed with it. And then actually it wasn't one comment, a bunch of other moms like in the neighborhood just kind of were like, oh, same thing. My kids saw it. They loved it. They loved it. Okay. So this is like a stupid thing back in the 2000s that you would see on Facebook. So the difference between what I was doing and what kind of the rest of the world would do, including like even if you were a hedge fund manager, you would see that comment. You would just go to work, right, and continue with the same things you do for your hedge fund. So I see a comment like that. I'm like, wait a second, what is this show? Who makes
Hmm.
the show?
Hmm.
And so I research it, and I was like, oh, this show is made like a really small publicly traded company that trades on the UK exchange, and they've never really had a huge hit show before. And this is like their first big deal. So if this show ends up becoming super, super popular, they're going to get to license that to all the toy makers where they're going to make Chuggington merchandise. And this could be a real needle mover for these guys. So I went ahead and invested in that company, and it wasn't very long. It was like just a couple months, 2, 3 months, 3, 4 months, that the company came out and were like, dude, the ratings for this show are through the roof. I think
Right.
they might have had a deal with Disney or something, and 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 they ended up like the market realized that this is going to be a big deal for them in terms of licensing, and the stock went up massively, massively, right? And so this all started with a random comment that one of the moms in our neighborhood friend group left on Facebook.
Right.
Okay. So if you asked for like an example. That's like a really old example, uh, but an example for how I surface something and then kind of go through the process of, yeah, this is meaningful. Oh, and by the way, no one else knows about this yet because the show literally just aired for the first time today. Like,
Yeah.
so definitely no Wall Street analyst. Before we started this show, you were telling me that a lot of your traders in your community traded ELF. That you read about my ELF trades,
Yeah. Yeah.
right? And you were probably trading ELF for a very different reason than I was trading ELF. But like, I was trading ELF all based on one viral video that
The
Jeffree
Jeffree Star.
Star
Yeah.
did, and I tell the story all the time about how I called the analyst. I've done this a couple times with different viral videos. But I called the analyst who for like a top four bank and asked them, I was like, hey, like, did you see this like Jeffree Star video, for Elf? And like, who's Jeffree Star? And
Yep.
like sometimes I forget just how old school all of Wall Street is. Like, obviously they're not watching, makeup tutorials on YouTube, like because they have, they have professional life and
Yep.
professional jobs, right? And so that's not what they do at their time. And I've been doing this for so long, and it's still like it's 2025 now, and I'm still talking about reading comments on TikTok, and still to this date, I know these guys. Like I know they're still not doing this. You can still get an edge over them if you look where others aren't looking for your alpha. So I
And
know that's a long-winded answer, but
no, but that's perfect because it answered so many questions I was gonna ask. So that was excellent. And is it really about training yourself? Because to look at the examples you gave, Elf, the Chuggington Show, like you said, that's not stuff that traditional Wall Street's going to be paying attention to. It's geared more towards women or kids, a different almost clientele than a lot of the stuff that they're probably focused on and recognize in their day-to-day lives. Is that a lot of what you try to do, or is that just kind of a
uh,
byproduct of the stuff you see?
so early on, I would say the easier opportunities were in underrepresented, I don't want to say underrepresented demographics as it relates to Wall Street.
Right.
So female, youth, non-white, um, anything that looked different than the average person who was working on Wall Street. th that was like the polar opposite of when I was garage selling. Right, I was garage selling. I'm looking for male items.
Right.
I'm trading now. Ironically, looking the exact opposite. And so early on, I would become. God, I spent so much of my life laser focused on female trends and youth trends and, trends that were happening, surfacing from different cultures and, different races. And because they tend to be slow to pick up on those things because it's just naturally foreign to them. But that said, it's not really all about that. Like this methodology and this type of discovery is applicable to every industry category. I'm going to give you an example of the
Sure.
opposite of everything I'm telling you right now. Like this phone, the first iPhone is the most male or I mean there's it's a phone, right? It's technology. It's not like some fashion trend. And the fact that Wall Street was when I wrote my book Laughing at Wall Street, this is like back in 2010, well before Wizards. Um, I had a whole chapter, I think, like a whole chapter about Apple, or most of the chapter about Apple and the iPhone, because Wall Street, I mean, excuse me, Apple didn't do a deal with AT&T in the first, no, excuse me, they only did a deal with AT&T in the first year. So you could only buy the iPhone if you had an AT&T contract.
Right.
Well, AT&T in Manhattan, when the iPhone 1 came out, had a data network that could barely go through concrete and
Hmm.
buildings. So essentially nobody in Manhattan and a lot of the people back then who worked on Wall Street, it was still very Manhattan and Wall Street focused, would use an iPhone because they actually couldn't use it, whether it was
Right.
for Well, for personal reasons, because you couldn't get data. And then for business reasons, nobody used the iPhone because business hadn't kind of transitioned away from the BlackBerry
Right.
yet. So there was a massive amount of bias and just lack of visibility into, not even if you didn't have it, you weren't experiencing it through your friend network, right? Like you weren't dropping your kid off at school and seeing other moms and dads like talking about how amazing their iPhone was because they all lived in Manhattan, right? And they couldn't really have an iPhone because it wasn't on a network that could penetrate buildings in Manhattan. Really a fascinating bias that existed. And because of that, that was one of the, not the only reason, but one of a multitude of key reasons why Wall Street was slow to appreciate the iPhone for the game changer that it ultimately was for Apple, the company.
Right.
And so that was one of my biggest trades, at the time. It was like Apple based on the iPhone. Back, actually recently spoke to my little brother about this. He reminded me that I owed him because of this trade. But my younger brother was like always kind of like the gamer kid
Yeah.
in the family. And when he turned 21, this is a very long time ago. When he turned 21, I said, "What do you want, man? Anything you want." He goes, "I want to go to the it was like the E3 conference where they have all the new gaming stuff." So I was like, "Okay, I'll figure it out. I'll take you there." And I did. And it was the year when the first PlayStation and the first Xbox came out at the same time.
Hmm.
And the technology press and the gaming press was obsessed with those two platforms. But the real story that nobody was talking about, and you wouldn't have appreciated it if you weren't there in person, was the Nintendo, like Wii, that was
Yep.
coming out. Because like, come on, Nintendo of that time, like, but there was something so special about the way that people were interacting with that Wii console.
Right.
It was magical, very similar to the when you saw someone hold an iPhone or when you held an iPhone for the first time. It was
Yep.
like weird but magical, and you just got this feeling. You're like, I'm seeing the future right now. Well, that's what happened when someone used a Wii for the first time, played on a Wii. And if you weren't actually there, like watching it or experiencing it yourself, you would not understand. It doesn't come out on paper. And so that was something that I experienced. And then I like went down a really deep wormhole of research into other people on like, internet groups that were talking about the Wii once they used it. I was like, this is really big, and Wall Street doesn't get it. And I was so frustrated because I couldn't trade options in Nintendo because it was an ADR, right?
Right.
Like they didn't have options. This is wild. I can't believe to this day, I can't believe I did this. And I don't know if I've ever done this before, but I sold every single stock and I had a single stock portfolio at the time. The only stock I owned for a while was Nintendo. I think it was the only stock I owned, at least to any meaningful degree. And I was like, wow, I can't trade options, so I just got to go all in on this one. And man, was that a run? Like I think I was in it for like a while, like maybe
Yep.
a year and a half. It was a hell of a run for Nintendo, and it was because I was able to identify a bias, or there was a way to surface that data that you just couldn't do properly if you were a Wall Street or financial professional. I just happened to be right place, right time, and I took advantage of it. So there's a lot of
Yep.
different, what I'm trying to get at is there's a lot of different ways to surface change in the world.
Yep.
The easiest is digitally because that's where the whole world lives and speaks and engages. But even on digital networks like TikTok or anything else, there's still a lot of different methodologies and there's a lot of different things you could be looking at. There's not just one way to do this.
Right. And speaking of or using that Nintendo trade as an example, once you come up with an idea, however you surface it, whether it's going in person like you did to E3 or finding out an idea through TikTok, how do you think about structuring the trade? How do you determine whether you use shares or options, the duration for the option? I think in your chapter with Market Wizards, you talk about when how long the news is going to have an impact for, and obviously that's a judgment call. It's very malleable, but how do you think about structuring your trade and how you decide what position size and risk you're going to take and all that?
Yeah, I think the most important piece of the trading strategy, once you try to once you have to actually execute on your thesis. So you have this thesis, you test the thesis, you're like, oh, it's meaningful, all this stuff. No
Right.
one knows about it yet. Most people don't know about it. Is you have to develop a trading window. So like the window all revolves around two things. Like we'll assume at this point you had discovered what I refer to as an information imbalance.
Right.
So like uh, you have the information other people don't. You want to try to assess at what point the market is likely to come across that information, and that's what I call the point of information dissemination,
Hmm.
or what I call it information parity, when everybody now has access to that information, right? So often it's easy because it's an earnings report, right? So you know it's going to be an earnings report. Other times it's not an earnings report. Other times it could be the release of a movie, like the Barbie movie was a huge trade for me for Mattel, right? So it's
Yep.
like I purchased options that were going to kind of expire right around the time that the movie came out, and I thought other people would appreciate how big that movie was going to be. And so you have to kind of figure out, okay, when will the rest of the world likely know about this thing?
Right.
And then yeah, often I do trade a blend of equity and options. I'm not like I used to be a big out of the money options guy. I'm not anymore because all you kids started trading options during the pandemic and drove up
Yep.
the price of premiums. And so like on out of the money, because half of y'all want to like make 100 times your money on a trade. And so
Yep.
that's what you're all doing. And those premiums are too expensive for me now. So I'm usually like at the money or slightly in the money. I don't do anything fancy or sophisticated as it relates to options or trading strategy. I don't even spend that much time thinking about it. I just basically buy the option at a time when I think people will likely to know about it. And what's really cool is like the last 5, 6, 7 years, I talked about Wall Street utilizing transactional data so aggressively, like every fund is using it aggressively now. And the data's decent. It's not the best, but it's not bad either.
Hmm.
Usually, with this transaction data, Wall Street is eventually going to get an edge on when the actual full data gets released through an earnings report. So, a lot of times you'll see these stocks moving up or down in the week or two or three before earnings. That's because that's kind of when the transactional data starts to get processed, synthesized, traded on by big Wall Street funds. I love that. The reason why I love that is because now instead of having to buy an option that expires like the week after earnings, for example, which is super expensive because you
Yep.
have to pay for the
The
earnings
volatility.
premium.
Yep.
Now, a lot of times, I just kind of assume if it's a big thing that I identified, I'm going to assume that the rest of the world is going to kind of figure it out before earnings. And what I'll do is I'll purchase options that expire the week before earnings. So I'm paying like way, way, way less premium. I'm getting a lot more leverage on my money. And it doesn't always work out, and that's okay because if they're slow to pick it up and my options expire either worthless or I lose, 30, 50, 60% on whatever I paid, I'm just prepared. I know that's a chance, and I'm just going to go in at that moment in time and can buy more options for after earnings, right? But but
Hmm.
but at least like I would say half-ish the time, I'll get a big move before earnings. And so then I'll get the cash out of that. And then I could decide the extent to which I think the information is disseminated or not. And if
Right.
I want to kind of take some of that money and roll into additional options that expire post earnings or not. But that's it. Like I don't overthink the trade. I joke around. I'm like, dude, I do all my research and all my trading on this, man. Like occasionally I'm on a laptop, but like almost, dude, I don't have screens and crazy stuff going on. I've traded through Scott Trade. They got acquired by Ameritrade. They got acquired through Schwab. So I'm just doing it. I'm just doing it on
Yep.
my Schwab account. Like there's nothing fancy or sophisticated about it. And a lot of times I don't even pay good attention to the trade. And I joke, I screwed up. Like a lot of times I will literally buy the wrong option. Sometimes I'll buy puts instead of calls by accident. I don't even realize it. I am not, like
Yep.
that's just who I
I
am.
got you.
I'll spend 40, 50, 60 hours researching a social arb discovery and then I'll spend like 2 minutes making the trade and screw it up. It happens.
Yep.
I
Perfect.
shouldn't.
Yep.
That's on me. I shouldn't, but I do.
Hey everyone, I just wanted to jump in briefly to let you know a little bit more about the podcast sponsor, Interactive Brokers. As I mentioned, Interactive Brokers is the largest US online trading platform, and it's what I personally use to manage my trading accounts. It's super easy to set up, customize the columns, so you can always know exactly what's going on with your positions at any time, whether you're on the desktop or on the go using their mobile app. It's also super easy to use their ordering system. You can attach orders so you can automatically set a stop as well as a profit taking order right when you place a buy, which makes it super easy to manage risk, which is what I'm all about. To learn more, go ahead and click the link down below in the description. Highly recommend checking them out and enjoy the rest of the podcast. Cheers. Yep. And Chris, I asked people kind of what they wanted to ask you. I asked for potential questions from our audience, and obviously a lot of them wanted to hear about Tesla, robots as a service, that those concepts. And I know you're involved in Aptronic, Figure AI as well. So I kind of want to hear your thoughts maybe first about Tesla, AI, self-driving, where that's at, what the potential impact of that is, and then maybe we can shift to the robots as a service at a later time. But yeah, first things first about Tesla self-driving. What are your kind of thoughts around that, and how do you incorporate that into your strategy? Because it's a little bit different maybe than informational arbitrage.
It's not different.
Okay.
For anyone that follows me, they know this is no like big surprise. Robots are my big theme. They've been my theme all year. I've been prepping for this. I call it the trade of my life. It's probably the trade that if it works out, I think most people will end up knowing me for. And if it doesn't work out, I'll get a lot of crap for it. But I am about 300 to 300 and probably these days 350 hours into deep robotics humanoid research. It's a long story as to how I got involved with the sector through a chance encounter like 7 years ago with one of the founder CEOs of one of the big three robot companies. Um, I didn't believe in it at first, and then I did, and so now I, I, I always tell people you really only need one big trade in your entire life to be a top 1% investor. If you need to discover one thing a little bit early and act on it one
Mhm.
time in your entire life, if you could do that twice in your life or three times in your life, and if you do it properly, you could be amongst the very best investors in the world over a multi-decade period just by doing that and absolutely nothing else. And you saw a lot of this with Tesla early on, EV. There were people, and by the way, that was a social arb trade because there were people that were able to assess what was happening with Tesla because they happened to drive one or had a
Right.
friend that had one. And there was just no way to believe what was happening with EVs and that brand unless you experienced it firsthand. So, not a lot of people on Wall Street experienced it firsthand. That's all I'll say. And the people that did, it changed their lives, and they ended up. People did some crazy stuff with their Tesla trades. And listen, a lot had to go right, and a lot did go right. And it's stunning. I would say if you were to look at some of the best traders over the past decade, based on a decade long, return on equity, a lot of those traders probably all nailed Tesla. And they
Right.
probably made a lot of other dumb mistakes over the time period, but they probably nailed Tesla. And that one trade, it made their entire life, right? So I'm really fortunate in that I got to have exposure to robots and humanoids very early on. And I've had a lot of exposure to humanoids. I've probably had, I don't know, there's probably a small, very, very tiny handful of people in the world that don't work at one of the top three humanoid companies, like don't work at Tesla, Optimus, that don't work at Figure AI, and don't work at Apptronic, or maybe don't work. You can count Boston Dynamics if they're over working at Hyundai, who have seen what I've seen
Hmm.
and up close, not just once, but like over the course of a while, and have seen it evolve from like a foot away. And what I've seen is just so stunningly life-changing. And I try to express this to people. People don't know what's coming. Like, and I don't blame them either, because you can watch all the videos you want of this stuff. It just doesn't, it's not the same. It's not the same when you're seeing it on video. Um, and by the way, I want to be clear, like, I haven't seen the end goal yet.
Right.
Like, and I'm talking to a lot of people at this, like, this is the year. Like, 2025 is the year when the rubber meets the road. 2025 is the year that we see humanoid robots hitting full-scale pilot programs. They will be put to the test. Can they actually perform repetitive, difficult work? 20, 21, 22, 23 hours a day, potentially 7 days a week. Can they perform that work at anything remotely close to human speed and do it in a way that's safe and durable? To where, the joints aren't overheating every 4 days, the wires aren't fraying, they're not randomly just, weird things are happening to these bots, uh, that was unexpected, that we didn't see this last year in the lab, because
Right.
that's where we're seeing all this stuff right now is in the lab. So there is risk this year.
Hmm.
It's not like a guaranteed slam dunk, like watch out, like this is it. Like this is the year. This is a year that could set us back a bit in the movement, but if it doesn't set us back, or quite honestly, I don't even care if it sets us back. It's an engineering problem at this point, right? Like maybe it sets us back 6 months, a year. Um, but we only have one thing left to see. Okay, so like we actually only have one thing left. The second that we actually start to see these humanoids performing this work durably, repetitively, autonomously, that's very important,
Yep.
autonomously, reliably, at anything close to human speed, uh, it's it. We just crossed over a line that we can never go back, and it will be the most meaningful innovation, I think, of our entire lifetime. We like to throw out numbers like this is a third of global GDP, physical labor, and like it's so much bigger than that. Like it's so much bigger than that. Like physical labor is a third of global GDP because we only have so many humans, and human life and time is really, really precious. So I am not like this like Elon. People know me. I'm not an Elon fanboy. I'm not like one of these people that accepts everything or even most things or even probably half the things that Elon says. I'm really skeptical of Elon. But when Elon talks about a new meaning for the word economy, that this will redefine what we mean when we say he does get it. Like this is not outlandish.
Hmm.
If you ever were to create an infinite labor machine, and before, some people be like, but why does it have to be a human? Like what? I'm like, well, why are so many humans employed? Yeah, like why is human physical labor a third of global GDP unless you required a human form to do something, right? So
Hmm.
like we obviously a third of global GDP is we require a physical form of human to do that. So yes, if you could mimic that, but in an infinite way, I mean, where do we even start, right? This could be double, triple, quadruple, 5x what our global GDP is today in 30 years, right? Just bot labor, just bots. Physical, I'm talking physical bots, like
Yep.
robots, initially in the humanoid form. So when I go back throughout my life and I think of all those moments, and I've been trading since I was a freaking, like I said, since I was 13 years
Yep.
old, when nobody did that. I know you kids do now, but nobody did that back then. I think about these moments, like the birth of the internet and, Amazon and the birth of cloud computing and the birth of this, first, the mobile phone. Like I had a conversation with a guy this week about Nokia back in the day. Nobody, you guys don't remember that, but that was like the hottest company in the world. The birth of the smartphone that came after that. And, you can say the birth of crypto, which I was very, very late on. Um, but there are these moments that if you capture one and you're right, and you're mentally prepared with risk capital. Risk capital is really important. Like I said, I could have, we could talk about risk capital for hours. Most people don't understand the importance of having risk capital in their life. The biggest differentiator between people that are, have generational wealth, we like to say, right? And people that don't, usually generational wealth has access to risk capital, and they're actually able to deploy capital in a way that could generate generational wealth, where regular people can, but don't understand that they can. They don't understand that everybody can have risk capital. It can start with $5,
Yep.
$20, $100. Like I talk about in my old book, Laughing at Wall Street, it's, you know, if every dollar is $100, which it will be if you're deploying it with like high risk, high reward, eventually is likely to be, then all of a sudden you're finding money all over the place. Like you're like, oh, I'll make this trade-off in my life. I won't drink coffee, like Graham Stephan says. I'll just make my own coffee or whatever that stuff. It's like I don't want to do that to save $2 a day, but to save $200 a day, I'll do it now, right? Like I'll wait 6 months to get that TV I want to save $100 because you're actually making $10,000 with that $100 because you're putting it in a risk capital account. So once you understand how to designate risk capital that you're not afraid to lose, you're because listen, at the end of the day, I don't care how confident you might think you are a social arb trade or an opportunity or like my robot trade, how confident I am.
Yep.
There are so many risks. There's macro risks, right? There's so many risks. There are risks that I can't even assess, right? At the end of the day, you have to deploy risk capital on that trade. But if you're right, it's life changing, and you only need to hit it once. So this is probably the biggest, I would say, change in the world that I've been ever really gone full public with, and have just been nonstop talking about for a year now, over a year, because it's that big. It could be the biggest. It could be bigger than the internet, right? It could be bigger than this. It could be bigger than the birth of like online advertising. Like that,
Yeah.
that's an industry I worked in at the birth of it, like at the very beginnings of it. Like could be bigger than, it's Google. Like what, 85% of Google revenue is online advertising. Robots could be 1,000x bigger than that, right? So, one of the things I've talked about is, one of the three big robot companies, Aptronic, publicly announced recently in the last few weeks that they formed a deal with Google, right? So like,
Hmm.
I wonder why Google is interested in that. Like, where the industry is that big. Why does Jensen keep talking about robots when he's sitting on basically the biggest, most interesting company in the world, NVIDIA, but he can't stop talking about robots? I wonder why. This is not just crazy Elon talking about this stuff, right? So something really special is happening right now, and it's the embodiment of artificial intelligence, and which is a fancy way of saying robots.
Yep.
Uh,
And bringing
because
it to the physical world.
we need to bring it into the physical world, because once we bring it into don't get me wrong, there are unbelievable problems that we can solve just with AI.
Right.
We can solve cancer, right? That's huge. It may be bigger than anything else, right? Quite honestly. Uh, we can solve we can solve so many problems for humanity, but practically there is such a clear pathway to solving massive problems with AI once we're able to embody that AI inside of bots and robots. And what I mean by that is there are a lot of questions when it comes to how long will it take us to cure cancer with AGI. right?
Right.
And I feel pretty good that we will, and that's going to help us to do that. But there are still like questions, can we do that with large language models, or do we have to wait for neural network artificial intelligence to really scale up? And how long does that actually take? How long will we be waiting? But when it comes to robots, we can debate all day long. Okay, how long is it going to take to really work out the foundational model for the walking gait so that they can like get on their knees and they could like crouch down and that they could have really good balance and leverage? How long is it going to take for us to figure out the engineering of the fingers and the sensors so that they can articulate well enough to have fine motor skills to do like the jobs that are really difficult that we're having really hard issues finding labor for? That's an engineering problem, and we could debate, is it 6 months or is it 2 years and 6 months, right? Or something in between. But we have a very clear path for because the type of AI that you need to embody doesn't even need to be that magical, right? To be able to
Right.
fix these problems. It's just engineering, artificial intelligence, foundational layers. We already have large language models. You can speak to the robots and they can convert that to the neural network foundational layer. This is such a clear pathway to make robots that will save humanity in ways that we never thought was possible. Something as simple as helping the elderly get out of bed and get to the bathroom, helping them to, extend the quality of their life, every human on earth by years, maybe 10 years, right? It's wild.
Yep.
Like, this is so, like, what's the value of that? Like, the value of that is monumental. And so when we think about labor, like, why, like, we're like, whoa, it's going to take all the labor. There's never been a point in human history when a technological innovation that displaced human labor hasn't created more human labor as a result of it. I see no reason why this would be any different. The difference, and this is the nuance that people don't appreciate, is the word labor means something different to every generation. So as we evolve as a species, what we consider to be labor today, people 300, 400 years ago would absolutely laugh. They'd be like,
Yep.
you are not working. Don't tell me that you're working. What you are doing is not working, coming up with memes for the internet, whatever the hell your job is, right? Like
Yep.
that's not work. Like work is toiling on the farms, right? Like work is doing real things like sweating. And I mean, it's so obvious to me that we're looking forward to a point in history when like work is going to radically redefine itself again. And what we mean by labor or work is going to be something much, much more interesting, much softer. And we're going to look back at a time and we're like, wow, in 2025, you guys were still a big portion of the global humanity was still doing that. You guys are like dinosaurs in 2025. And it's not like we're not, yes, we will take people's jobs as a result of this, but we're going to create new, interesting industries. And I really am confident that the demand for humans is going to increase, right?
Hmm.
In a totally different way. Are we going to have to figure out how to patch the transitionary time? Yeah, I mean that's of course we will. We always have had to deal with that. It might be rough for a little bit, but this is such an exciting time. And so if this is the biggest change of our life of maybe ever, honestly, uh, and it's happening very quickly. Like this is not going to be a decades thing. It's going to be a year, I think a years thing. I will say this, a lot of people in the robot space, in the humanoid space, I think are getting a little bit too excited and a little bit too ambitious. Some of them are friends of mine. Like I started kind of, I DM'd a couple of them and I was like, hey guys, like this is some of the numbers being thrown out here. I know Elon's throwing out big numbers, but let's just take a breath, okay?
Yeah.
Like this is a big year for pilots and proving out that what they can actually do. I'm not so sure. I'm not so sure. I'm as optimistic that we're going to be doing hundreds of thousands of these bots, commercial bots, in 2 years. Like I don't know that that's realistic. Maybe it is.
What would be a
Um,
success, do you think?
Oh, so I put out this tweet thread. By the way, my Twitter's at Chris Camillo for
Yeah,
anyone that
we'll,
wants
we'll
to read
put
it.
it down below.
Yeah, it's pinned, and it was January of 24 when I put it out. 15-part thread, and it was all based on Optimus having cumulative 1 million commercial bots cumulative by the end of 2023, and
Mhm.
how if that happens, which I think even at the time I thought it was reasonable. I still think it's like the most likely number in my head. If that happens, how that could equate to a $10 trillion valuation for the Optimus division of Tesla. I still feel today when I look back at that like once a month, I'm like, well,
Just a second, Chris. You said 2023. Do you see 2023 or 2030?
oh, I'm sorry that
Yeah,
that was 2030. By the
2030.
end of
Good.
2030, I still look back at that tweet thread and I feel like it's directionally accurate. I think
Hmm.
it's still within a degree of accuracy that I believe in today. I think that's all they need. Like they don't need tens and hundreds of millions of bots because of the way that the bot economics are playing out and the value of these bots to commercial and the industrial world, which is where they're going to land initially. I know Elon's being real aggressive. Sometimes I feel like Elon just throws out numbers, doesn't talk to anyone on his team, and then kind of challenges them to freak
Yep.
them out. And then they have to figure out how to get even somewhere remotely close. So I'm not blaming him for putting out those numbers. It's part of the way he operates.
Yep.
But we have to understand that, right? Like
Yep.
we have to understand. And so let's not bake in these crazy numbers because they're just not even needed. Like you don't need to do numbers like that
How
to
are
hit crazy
you
valuations.
positioning for this change? What kind of uh, what kind of areas? Obviously, Tesla is one, but how else are you positioning for what you feel is a big momentous change in how we live?
Well, from an investor perspective, I think there are three obvious companies in the space, and unfortunately, two of them are private, but it's Tesla, it's Figure AI, and Apptronic. Because they're all partnered, or in Tesla's case, they have their own internal mega tech AI platform.
Right.
You know, all the world's commercial companies are going to want to uh, sign a cover your butt contract because this is like the next few decades of physical labor. They're not going to partner with a random bot company. They need to partner with a bot company that they know has access to a bleeding edge foundational AI layer, neural network layer that will improve every 3 to 6 months. So, you know, if you're moving a couple hundred pieces of sheet metal an hour at their factory in 26, it's going to get up to 250 in 27 and 280 in 28. I mean, I think these bots are going to eventually hit like 130, 150 plus percent of human speed. But to do that, you need access to the best foundational AI in the world. And there are only a few companies that have that. So that's why you see so much interest in companies like Tesla and Figure, and recently, you're starting to see stuff about Apptronic with their Google
Partnership.
partnership. So for me, I'm invested in all three, right?
Hmm.
Like I would say I'm like ridiculously aggressively invested in all three. Um, and it's because I feel that all three are going to be successful in the space. Uh, Now, you could start to think about what companies will benefit most from this, and that's not very difficult to do, right? Like it's the one that everybody talks about is Amazon, and it's really true, right? It's really true. Like, some rumors about Amazon doing their own internal stuff. By the way, rumors about, OpenAI. I tweeted about this last weekend that they're creating their own robotics.
Yeah.
There'll be a humanoid division internally. Uh, that's how big this is. Sam Altman's like, oh, we know we have a partnership, but we need to also do our own because this is just too. It's like how do you have the largest industry that's ever been created? Like you can't take any chances that you're not going to get a piece of that, right? You can't. You just can't. Um, Meta's done a lot of work in this space as well, and I'm really curious the next couple of years to see how Zuckerberg, like what he's thinking and how, you know, Apple as well, obviously, right? So, but there are only going to be a few companies in this space. But what's really interesting are once the world believes this is real, and when I say the world, what I mean is the investor, the investing world,
Yeah.
institutional Wall Street, institutional capital. The second that they understand that this is real and happening, which is a little bit difficult because it's so Jetson, so Star Trek-y that our human minds just won't allow us to believe it. They need to kind of like you need to see it to believe it in person. I've seen it now a lot, so like I know it's real. When that happens, I mean, everything's going to turn upside down. The thing that Elon keeps talking about of like redefining what an economy is, that's going to happen, but it's going to happen slowly. The chat GPT moment that Jensen talks about, he talked about it again at his CES keynote for robotics and humanoids. What he means by chat GPT moment, what I mean by, because I've been saying this a long time, what I mean by chat GPT moment for embodied AI and humanoids is the moment that the world realizes that it's real, right? And so it might not happen like overnight. It might take many, many months for people to come to that determination, but it will change the financial modeling for just a huge number of companies globally, right? And so what I would do as an investor is I would look at who who employs the most physical labor for repetitive jobs. Then I would look at, forget about who employs the most physical labor. Even if you don't employ physical labor, what industries, what sectors, what companies would benefit most from an infinite labor machine, even if they're not currently employing physical labor because maybe it's too expensive. So a good one to think about is healthcare. So we know that, a good part of the world spends many years of their most prime years taking care of an elderly person, right? If there was a physical labor machine, like how would that change that dynamic?
Right.
Who would benefit from that? Like what healthcare companies would benefit from that? I don't know. You just have to go through a long exploratory process of the world is changing. It's turning upside down. We're going to redefine what the word economy even means. This is the biggest change we've ever known. So let's start doing homework as investors and start to figure out, okay, what are the tier one, who are the tier one companies where this will be impacted? Then tier two, then tier three. And I always like to say, sometimes when you're early, even if it's less important to be right than to be right about what other people think are going to be right, right? So like who are the obvious companies that people will naturally assume will benefit? Because those are the companies that you'll see the biggest movement earliest in their stocks. Even if you think you're smarter than them and they're not really the companies that will benefit most. So if you're like, no, 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 these companies will benefit most. Well, if it takes a ton of work to figure that out, and most people aren't going to figure that out for a while, those are probably not the best trades initially. Go with the obvious stuff is what I would say. By the way, I need to say this. I'm not a financial advisor. When I say go with the, I'm speaking really to myself. Like this is
Yep.
how I think about this. So everyone's risk tolerance is different, of course. I'm not saying to invest in robots or Tesla or Amazon. But like this is the thought process that
Yep.
I go through. And it's a really complex thought process that never ends. But man, I'm so excited, dude, because like this is it. Like this is the opportunity. And if you're an investor right now in 2025, I think we're about to go through the biggest change in history. And that will equate to the biggest opportunity in history to be an investor and to monetize that change. So, dude, how cool is it to be an investor right now?
Yep.
This is wild, wild stuff. Like the next 2, 3, 4, 5 years, if you could just be a little bit quicker than others to connect dots here and to find risk capital and like throw some risk capital behind some of these ideas, like and the best part about this is it's robots. And like I said, the reason why I say that is because nobody believes it.
Yep.
Nobody believes it. It's robots. Do you think people believe there's going to be a billion robots walking around doing every job on Earth, building cities and like literally taking care of every elderly person, like just literally a robot in every house, some houses with two, three robots, like every one of them paying a subscription fee for software and AI foundational models on top of the hardware. Like, who's paying that? Is healthcare paying that? I don't know. Like, who's making money off that, right? Who's servicing all these robots? How does this change a company that has hundreds and hundreds of thousands of physical laborers right now? Like, that instead of that, they could have a million physical laborers, but have 700,000 of them be robots. Uh, it allows them to scale out their product to customers that would not have paid for it, or they just couldn't take the risk to scale, but now they can take the risk because they don't have to employ humans. They could just, deploy bots. And
Right.
maybe the humans that they used to employ have different, more interesting strategic jobs than just literally spending their entire life moving a piece of metal 2 feet behind them to 2 feet in front of them. Is that how we want to live? Like, do we want humans to live their whole lives just moving metal for 40 years? Like that's not how I live. I want people to live my life, not that life. And so I'm excited as an investor. I'm also pretty pumped just for humanity, right? Because I think it's going to like make everybody's lives so much better. And that's the funnest part. It's like when you're
Yeah.
investing, because when you get in this space, let's be honest, you're spending a lot of time. You're watching a lot of videos. You're reading all the white papers. You're literally, every time anybody tweets about a robot or a humanoid, you're reading it. A lot of it's junk, but some of it's awesome. You're following all the robot companies. Like, this is what I do. This is my life right now. I tell
Yep.
people like roughly half of my life is robots. Um, it has to be. But what's cool is you're doing it not just because you want to make money, but because like, wow, this is going to be awesome for people, for humans. So it's
Yeah.
like it's kind of a joyous thing to have to research every day. It's kind of like I used to when I was younger, I spent a lot of time social arbing biotech stocks. I would actually follow uh family member. I would try to identify family members and friends of people that were in trials that were on internet web boards talking about how well their family member was doing. And it was like this is like crazy work. It took
Yep.
so much time. You might find one or two people that would like occasionally post on a web board, like a medical web board related to a disease, that hey, my cousin is like, dude, doing so well on this new drug. They wouldn't even talk about the drug, but you knew what it was because you
Right.
knew what was in trial.
Right.
And so this is the work I used to do, and it was like brain numbing work because you were just 99.999% of the stuff you were doing was like reading through stuff that didn't matter to try to find this one comment from one individual, just waiting, waiting, waiting. But what was cool was that when you found it, it wasn't like, oh, I'm going to make so much money. It was like, oh my God, this new drug is going to work.
Right.
Dude, the people, like their lives are going to get saved from this.
Yeah, perfect. And Chris, like you said, it'll be so cool because like you said, I think robots everywhere is super tangible and it would be a complete mindset shift to have them there because right now, your experience with a robot might be the food delivery robot that gets stuck on the curb because it's not smart enough to get around up the, up the ramp. So we'll have to see how that plays out. And I just want to thank you for taking the time to kind of walk us through your process. And it's super excited about the robots as a service. Like I said, a lot of us are trend traders, chart traders, but we're also trading the themes and the disruptive, themes in existence. So this has been super helpful to help improve how we think about that. Just to wrap things up, do you mind kind of giving, a few bits of advice to traders out there who might want to get um, more aware or more in tune with how you approach things, thinking about informational arbitrage, all of that? Any advice for traders out there to improve on that?
Yeah, I will say that Jack Schwager did such a stunningly good job. Maybe you agree. You just read the chapter, right?
Yeah,
It's like 34 pages. It's not my book. I don't make money from it, but like it's Unknown Market Wizards. I would get the softback because it's like updated. Um, that's a great start, man. That
yeah,
34 pages is like the ultimate like primer for social arb trading. We do our YouTube. We haven't done our YouTube show in a few weeks, but Dumb Money Live is something that we try to do every week. It's a passion project for us. Like we don't, like honestly, me and my two YouTube partners, Dave Hansen, Jordan McLean. We do this for we want to bridge the entire world into the investor class. We don't sell stuff. We're fortunate to be at a point in our life where we don't have to. No negatives to all you guys that do, because I know you're young and you're making a career out of it. But like we talk about this every week on our YouTube show, Dumb Money Live. I obsess over it on my X account at Chris Camillo. So, follow us on YouTube. Read Jack Schwager's book. It's really good. I've done like, I don't know, I've probably done like 100 interviews like this, and I always talk about something different every time. So if you really want to go down a deep wormhole, you can of my interviews. But I would say more than anything else, just know that retail traders have a massive edge over Wall Street. I know it's the exact opposite of what everybody tells you, but I promise you one thing. We have a massive, massive edge over Wall Street. I know how they think. I sold to the top hedge funds in the world. I know those guys. Some of them are my good buddies or my friends. They're great humans, actually, contrary to popular opinion. But they have to work within a framework, right? And a lot of them are just their DNA is a little different, like the way they think and operate. We are a lot more creative. We can move quicker. I think it's really important to understand how to bucket your money and how to find risk capital in your life and have it not be the capital that you're using to go on family vacations and send your kids to college. You have to figure out how to have a separate bucket of capital called risk capital. That is capital that you're not afraid to lose. That if you were a billionaire, you would be investing the same way that a billionaire invests,
Right.
because that's how you really make the money, right? Like that's how I've done, I don't know, roughly 70-ish% annualized returns total portfolio going on 17 years, is because I take massive risk with my capital, or a big chunk of my capital. But this is, I mean, this is all doable, right? And I would just say it's a process. You get better in time. Like it's insane to me that every person, when they list their hobbies, doesn't list like investing in their top three, four hobby. Like you're insane. Like in the age of AI, uh, you have to be invested in assets, right? Like you have to be part of the investor class, because you know when you think about how much more productive and efficient all the world's companies are going to become as a result of the uh industrializing intelligence as an industry, like it's in robots, like it's just, you want to have capital in companies that will benefit most from this. So there's never been a better or more important time, or quite honestly, yeah, like a better in terms of like easier time to be a retail investor and crush it, I think, in the next few years. So I'm super optimistic, as long as you're investing. Right? Like I'm super optimistic. Now, we're going to go through a transitional time when for a small period we're all very confused, and the our labor maybe might not be as valuable as it was a few years ago, until we can make it to the other side, where
Yep.
all of a sudden it becomes very valuable again. There is going to be a tough time for a lot of us. And so, which is why I think it's really important to find other ways to benefit from this change, being an investor. So,
Wonderful.
yeah, man, that's it. I know I'm talking all over the place, dude.
No,
This is probably
this is
it's got to be the weirdest interview you ever done, right?
No, this has
But
been great because, like we said from the very start, this is so different from how I view the markets, but it's so informative, and you've opened my mind to investigate further into those themes. So, Chris, thank you so much for your time. We'll have the links down below that you mentioned. To everybody watching, I hope you guys really enjoyed that. I'll definitely be watching it back a few times and taking notes. So if you did, go ahead and leave a like down below. Subscribe if you're new to the channel. And Chris, thank you again, and we'll see you guys with your videos. Cheers. Hey everyone, thanks so much for watching. If you did enjoy, please go ahead and leave a like down below and subscribe to the channel for more interviews with top traders and hedge fund managers. Also, be sure to go ahead and click the link down below in the description and check out Interactive Brokers to learn more about their award-winning platform. Thanks so much in advance. And we've got a few suggested videos for you to check out if you're looking for more top-tier educational content. So enjoy.